So India is about to overhaul its goods and services tax, the GST, and the changes are being described as the biggest tax reform since GST was first rolled out in 2017. The government says this is going to simplify the system, lower tax rates on many essentials, and even boost economic growth. But what does that actually mean, and what's changing, and how could it affect you, the businesses, and economy at large? Let's break it down. This September and October, the GST Council, that's the body of central and state finance ministers, is preparing to sign off on something they're calling GST 2.0. The goal is to simplify the tax structure ahead of Diwali 2025. In fact, the Prime Minister mentioned it during his Independence Day speech this year, saying that reforms are on their way and will help everyday people, farmers, the middle class and small businesses.
मेरे प्यारे देशवासियों, हम नेक्स्ट जनरेशन जीएसटी रिफॉर्म्स लेकर के आ रहे हैं। ये दिवाली के अंदर आपके लिए तोहफा बन जाएंगे। सामान्य मानवीय की जरूरतों के टैक्स भारी मात्रा में कम कर दिए जाएंगे।
So what's on the table? There are mainly three pillars: structural reforms, rate rationalization, and ease of living and doing business. Let's take a closer look now. Okay, first up, structural reforms. Right now, India's GST has something called an inverted duty structure. That's when the tax on inputs is higher than the tax on finished products. For example, a company pays a higher GST on raw material than it collects on the final product. The result? Stuck tax credit, cash flow problems, and less incentives to produce domestically. The reform promises to fix that by aligning input and output taxes, freeing up working capital and supporting Atmanirbhar Bharat or self-reliant India. Second, they want to tackle classification issues. Basically, too many products fall into grey areas, leading to dispute and court cases. And third, predictability. Businesses often complain that GST rates change too often. The idea now is long-term stability so industries can actually plan ahead. Next, probably the part where consumer care is most taken care of, and that is GST rates. India's current slabs are multiple at 5%, 12%, 18% and 28%. The reform would reduce that to just two main slabs, a standard 18% slab and a merit slab of 5%. So what gets cheaper? Well, actually quite a lot. Electronics and appliances like ACs, TVs, fridges, washing machine and even cement could move from the 28% slab to 18% slab. Small cars, especially the most popular models and versions, may also drop from 28% to 18%. Essentials like toothpaste, umbrellas, sewing machines, bicycles, and even pressure cookers could slide into 5% category. And things like health and life insurance premium, they may finally be GST free. Meanwhile, what gets costlier? Well, luxury and sin goods like tobacco, gutka, pan masala could see a new top rate of 40%. About cars and bikes, remember right now passenger vehicles attract highest GST slab, and that's the 28%, plus a compensation cess that can go up to as high as 22% depending on the car's size, engine capacity and body type. Electric cars, on the other hand, are treated differently. They are taxed at just 5% with no cess at all. For two-wheelers, the GST rate is also 28%. Smaller bikes with engines up to 350cc don't pay any cess, but once you go above that threshold, there is a 3% cess on top. Now, here's where GST 2.0 changes things. The government wants to scrap the entire 28% slab, which means that cars and bikes would now move down into 18% bracket. This shift alone makes vehicles at least 10% cheaper on paper. Depending on the model, savings could be even more higher. The third pillar matters for millions of small businesses, and that is ease of living. Registration is supposed to get faster and more tech-based now. Returns will be pre-filled to cut down on errors. And refunds, especially for exporters and small manufacturers, are supposed to become automated and much more quicker. And if this works out, it could save MSMEs, which is the micro, small and medium enterprises, both time and money. The roadmap is tight. The Prime Minister announced a plan on 15th of August. The GST Council will hash out the final details by October this year. If all goes smoothly, the system goes live before Diwali 2025. Think of this as this year's festive shopping. Diwali offers could look a whole lot different this year. The Prime Minister says the change will be rolled out before Diwali 2025. That means by October or November. The GST Council will meet in fall to finalize details, but the target is clear. Simplify slabs, lower rates on essentials and make compliance easier. By March of 2026, the controversial compensation cess, which is that extra charge on certain goods, is also expected to be phased out. For consumers, this could mean everyday items become noticeably cheaper. Think about it. Toothpaste, soaps, small electronics and even insurance premiums will all cost less. And those savings matter. Cheaper goods could mean more purchasing power, especially for middle-class families already feeling inflation pressure. White goods like refrigerators, air conditioners and washing machine could see a surge in demand because of lower taxes. For businesses, especially for MSMEs, the reforms aim to simplify life. Fewer disputes, predictable rates, faster refunds, fixing inverted duty structures should make manufacturing more competitive, potentially reducing imports and encouraging domestic production. And on the bigger scale, GST 2.0 could expand India's tax base, formalize more of the economy and ultimately boost growth. The government is framing this as not just tax policy, but an economic strategy. So is GST 2.0 a game changer? In the bigger picture, GST 2.0 is designed to make economy more formal, competitive and consumer friendly. It's about simplification, fewer slabs, fewer disputes and hopefully faster growth. But as with all major reforms, the real challenge lies in execution, making sure states, businesses and consumers adapt smoothly to this new system. So by Diwali 2025, India could be celebrating not just with lights and sweets, but with a leaner, simpler and maybe a fairer tax system. That's the promise of GST 2.0.